Welcome to the accounting school. We are now in April and you all must be geared up with the tax planning for the new financial year. Ever since Gift Tax Act is abolished in 1998, people take this as an opportunity to shift the tax burdens. However, there are caveats here and this is what we are going to discuss in today's video. We would see Section 56 provisions of Income Tax Act as amended in 2017, which explains what are the gifts which are exempt in the hands of recipient and which are not exempt, where the clubbing provisions are attracted, etc. and what are the kinds of gift, cash gifts and non-cash gifts. So let us start the video. All of us know that the threshold of gift tax is 50,000 rupees. So anything you receive in excess of 50,000 from the non-specified person, then that is taxable. But there is one myth. People think if you receive anything above 50,000, say 60,000, so only the 10,000 is to be offered to tax. No, it is the total 60,000 is to be offered to tax as a other sources income. For any jewelry received or any other movable property other than cash is received, then the fair market value of that property would be treated as a value of the property, and if the consideration, the transfer consideration is less than that, then that value would be taken as a property valuation and the gift would be calculated as per that. We have to note here that any sum of money received from a specified relative or at the occasion of the marriage of a person or under the will or inheritance or in contemplation of death of a payer or donor is tax-free or is not to be offered to tax. Now let us see what is this relative definition is and who falls under the relative and who does not. So the relative is spouse of the individual, brother sister of the individual, brother sister of the spouse of the individual, and either parents and the brother sister of parents and parents-in-law. So this sounds a little confusing. So I have made a chart for the persons from whom if you receive the gift, it is not taxable, and the link is given in the bio. You can go through it and if any queries, you can revert for the same. Now gift is in two types, gift, cash gift and gift of a immovable property, or we can put it as a gift of movable and immovable property. Movable property comes as cash, jewelry, drawings, etc. and immovable property is anything like land and building or flat as we say. So if the stamp duty valuation of some property is 2 crore rupees and you are transferring it for anything less than that, then the difference is going to be the gift. It will be treated as a gift, which is the consideration less than the stamp duty valuation. We have a similar provision under Section 50C of Income Tax Act, wherein the stamp duty valuation is taken as a consideration if the agreement value is less than the stamp duty valuation. The same example, like the flat of 2 crore valuation, stamp duty valuation, if it is transferred to anything less, say 1 crore, 1.5 crore, then 2 crore will be taken as the consideration for the calculation of capital gains. There is a difference between the definition of relative as per Income Tax Act and as per Companies Act. So in Companies Act, they include the gift received from the step relations, that is received from stepfather, stepmother and stepson. Gift received from stepdaughter or gift to stepdaughter is not exempt in Companies Act. However, in Income Tax Act, they do not cover step relations. In that place, they cover the gifts to or gifts from the lineal ascendants and descendants, which includes grand relations, that is a grandfather, grandmother, grandson, granddaughter. Now, another thing to note here is for gifts under FEMA. So FEMA follows the definition of relative under Companies Act. So FEMA also would not cover the gifts to grandfather, grandchildren, but it would cover the gifts given to and from the step relations. So this point we have to definitely keep in mind for the non-resident individuals. So friends, that was all about the definition of relative and the provisions of gift in income tax as well as the Companies Act. Hope you have followed something and you have got confused on something. So please put on your queries in the email ID and we would definitely like to cater to see. Thank you for watching. See you in the next video.